In terms of what you talked about, your ability to influence companies, if we go back to investing in the shares of a company, not all companies are good in their actions, as we know. Some are bad, those can be excluded. Some are going to be in that grey area where they're doing some good things, some bad things. What do you do as a company, as EQ investors, to make your views known to these corporates and to the boards? How active are you? How does that whole process work?
Great question. So EQ investors mainly invest in funds, which then invest in either, securities, for example, shares or bonds. So we have a multi-layered approach to this because we understand that we can kind of influence in different ways. The first way in which we do it is make sure that the fund managers that we pick and we choose to partner with do the right job when it comes to stewardship, so voting and engagement with the companies. And you'd be surprised how crazily different certain asset managers use the voting rights of their clients versus some others. To give you an example, there's environmental and social resolutions every year that get put to companies. What that means is a shareholder might come to a company and say, actually, you don't have a net zero plan. I really want you to have a net zero plan. If 50% or more of the shareholder votes support that plan, support that resolution, it goes through. Right. So what do we want as sustainable investors? Well, we would like them to support these kinds of resolutions that would bring about positive sustainability change. There's a huge variety of asset managers that would vote for 0 or 1% of these resolutions, and some that would vote for 90 plus. So first of all, we want to make sure that we're in that range rather than this. Second of all, we have really clear oversight of where best practice lies between these asset managers. So we pick very strategic themes: biodiversity risk, climate in banks, healthy nutrition, social safeguards and supply chains. And we kind of cross-pollinate best practice between them, and we track progress over time with milestones. So all of this is at the asset manager level. Now, what do we do with the underlying companies? So we partner with different other investors in coalitions or collaborations, because sometimes it's great to call them up and say, I would like you to do this, but it's much more powerful if you're there with a bunch of other people saying the same thing. So we will usually match each of our strategic themes, which I just mentioned a few of, the biodiversity and climate change, with a collaboration so that we can get access to the underlying companies and directly get on calls with them, go to the board meetings and push them on their identified weaknesses. And then lastly, we go to annual general meetings ourselves. Some people in our team at EQ do that. So far only in the UK, because we don't want to fly anywhere for that sake.
That is a bit counterproductive.
It is, isn't it? Exactly. So I went to the AGM of Rio Tinto, a big miner, actually not held in most of our portfolios, but we understand that it's something that needs to be pushed to the right way, because we're all reliant on minerals. Yep, we're kind of excluding miners, and then what's happening in the supply chains of that. So I was there to push them on that front. Damien's gone to Standard Chartered, which is a bank, and pushed them on their net zero commitments directly at the board meetings. So yeah, many different ways in which we can do that.
Brilliant. Sounds great. So we are as a firm on record as being a bit not cautious and maybe not as much as negative, but very wary of the idea that you can influence some of these big corporates in terms of their actions. We've historically taken the approach that we would prefer to not give client capital to firms who are going to misbehave, given the choice. But convince me with some actual rock-solid examples of progress that actually voting and turning up to AGMs and coming in coalition and putting pressure on these boards has had a positive impact. Can you point to things that have changed as a result of the pressure that you and others have applied?
Yes. However, I would want to clarify that not all companies are engageable. So we do share that view with you, and that some companies, you're wasting your time. Either it's because they're so locked into their kind of bad business model that, a gambling company is not tomorrow going to do toys or something, or renewable energy production. So there's some where it's too locked in and you're wasting your breath, right? or the risk is too high that it's going to fail and your client's capital is invested in a business that has huge risks attached to them. So that's true. Sometimes it's not engageable because the shareholder structure is so that they're kind of controlled by one party. So if you're a minority shareholder, you're not going to move the needle. But there are many examples in which there is concrete evidence. The biggest coalition of investors engagement coalition is called Climate Action 100 Plus. The purpose of it is to bring investors together to engage on the 100 plus biggest polluters in the world. So all the nasties you can think of, the Chevrons and the chemicals companies and everything you can think of. And in the beginning, when it was launched, and that was like 2018, I think, 5% of the companies that they had shortlisted had net zero plans. Now it's about 80. And I understand that there's other factors involved, but these very considered, structured engagement programs by lots of their investor base definitely contributed to that. Direct examples of EQ's approach. So this is a smaller story. We went to another miner's AGM last year called Antofagasta, copper miner, UK listed, but mainly working in Chile. We realized in their annual reports that they weren't clarifying how they do due diligence on the community impacts, right? They were saying we do it. And we were like, well, that's not quite clear because how do we know that you're doing it in what consistent manner? And are you going to disclose the outcomes of that transparently? Otherwise, if you're not disclosing the policies, no one has, let's say if you are a community member out there and you're not, you don't see a policy that allows you to issue your grievance, you cannot do that. There's no legal mechanisms to do so. So we issued that weakness to the board there. And this year in their report, they have not only restated their policy, so it's public, so there's a legal backing to grievance mechanisms. They've also showed the results of the audits of these community impact assessments, which provides the transparency for investors. So that's like a nitty-gritty example of how you can create change.
Perfect.